Stock markets have had to contend with an outbreak of geopolitical risk this week, and Thursday was as bad as it gets. We saw Israel announce a ground invasion of the Gaza Strip. We saw an outbreak of fighting in the Ukraine, which eventually led to a passenger jet being shot down. You'd think that all that outbreak of instability would cause markets to panic and stocks to pull back, but we merely saw a little dip, and that's something that's become a common occurrence in the past few years. Analysts and investors point out that what markets really care about today is how much liquidity there is in the system and what something like the US Federal Reserve is forecasting and what it actually is doing. So while geopolitical risk is always going to be a factor in the stock market, what investors are going to continue to pay attention to is central banks and how much liquidity there is in the system. So what the US Federal Reserve says and does is a lot more relevant to investors today than the outbreak of global instability, and analysts and investors expect that's going to be the case for the next couple of years. For the Financial Post, I'm Shmuel.